Before we begin, I just want to let everybody know that I may make some very forward statements in the following segment. Just be aware I'm not a financial advisor. I'm not offering any financial advice. Things I say in the following, obviously, this is just what I'm doing and what I think, and these are my own opinions. So, without further ado, let's just get on in with it. We're looking here at the S&P 500, and currently we're going on a bit of a tear. Not sure how long that's going to last. Update for the past week. We've been trading along this wedge here. And as you can see, this was taken right before the market closed. We were fighting the level of support there. And after the market had closed, we ended up maintaining the path that I was hoping for, which was a bounce off of the point of support there. Now, coming into Monday, I do expect to see a big fight. They're going to try to push it down. You're going to see possibly an attempt for them to push it down to that 240, 241, 242, somewhere around there. But that being said, I see that as a buying opportunity. So I'm going to come in, scoop up the shares when I can, because as I'm going to show you in a second, we are looking here at the monthly time frame. This is my EMA spread indicator that I use to scout for options plays. Now, prior to the previous run-up, we had the EMA spread crossover onto the aquamarine line. The yellow line, following price action, crosses over the aquamarine and drops down for quite some time there. And as you can see currently, the last time that we had crossed over after the run-up was a total of 25 bars, 759 days, where a total of 4.6-ish billion volume was traded, which is astronomical. And as you can see in the previous run, it was a 26-bar stretch, 792 days with 387 million volume. So big difference there on volume. But it also saw an 89.96% price decrease in that period of time. So that being said, this is generally where I look for entry on, for option plays and, purchasing shares. This is looking like prime time for me. And as you can see here, what we have here is the Bitcoin chart. And this is just overlaid with the meme stocks basket, as you can see. AMC and Gamestop there, peaking just after Bitcoin reached its first peak, and then kind of like just pulling back along with it. So, right now we're looking at Bitcoin perhaps taking a leg down while the meme stock basket takes off. That's just what it's looking like. And as we can see, GameStop itself, it as well, it finally found its way above the EMA spread indicator, and right now it's bouncing right off of a previous point of resistance that we were fighting to break out of, which used to be a point of support in the past. So like this image right here is taken right before the market closed, and again, I was taking a bit of a calculation as to whether or not it would bounce off of that, and indeed it did close the bar, bouncing off of the parallel lines, the parallel blue lines. So NVIDIA, as you can see, is reaching some new peaks here, which kind of just seem unsustainable at this point. $900, almost $900 a share for an NVIDIA. And generally speaking, when it reaches these sort of high peaks, there is going to be some pullbacks. So I just want you to be aware of that. And the pullbacks do tend to be pretty strong. We can take a little bit of a measurement here and see exactly how much that pullback was. 66.75% pullback there. So taking a look at, it seems like if I were to, enter to buy some puts on this, It would be probably right about now. This is where there was I believe it was reverse share split that was announced here, and it pulled back all the way to October before starting to find its next leg. So, that's something to watch for, and it's just kind of coincidental that, you know, Nvidia is peaking, and I do know certain financial institutions own a lot of that. I wanted to just draw your attention over here again. Here, this is the monthly time chart, and this is the price action history leading up to the 2021 sneeze. And this is why they referred to it as a meme stock basket, because stocks like KOSS and SBFM, while they don't have an options chain, they did get heavily shorted. And SBFM was coming off of a massive high from its all-time highs, and went extremely low, lined up with AMC pricing, and then squoze, and took a little sneeze and then launched itself. And that's where you can see the initial run up with GME, and AMC had its own massive percentage gains here. The tickers are a bit misconstrued, because both SBFM and AMC have gone through reverse share splits, between now and when this occurred. So their price valuations that you see here are a bit inflated, and as we're about to see winding up towards the end of this, the prices are just very much so in line still. And what happened prior to them squeezing before was they all reached a point of parity, and one launched, and then it was a chain reaction essentially that occurred. So somebody has all of their eggs tied up in this, and it's causing essentially the cycle to occur. And now I'm not sure exactly what we're looking at here for price targets, but it's anyone's guess. But it does appear like we're starting to have a reversal. So once this does take off, on that note, what I'm looking at here are the fair value gaps. Now, these are areas that are going to act as like a magnet for the price. So generally speaking, you'll see it reach one of these areas on the rebound, and the price action will go like, essentially up and then down and then up and then down, and then eventually it'll continue on the same path as the trend. But as you see, we have FVG at 4, FVG at 6, at 7, and at 10. We have another one at 12, and then another at 32 and 40. And then the next gap up is over here around 85. So that's what I'm looking at as far as price targeting. The last fair value gap that I spotted here was up at 240. And yeah, it could potentially get all the way up there. As I said, who really knows where this is going to go. For all intents and purposes, this could stagnate out for a little bit longer. So, price targets up in that range are possible. There's going to be a lot of volatility between that $85 price mark and that 240. Obviously, the whole ride's going to be rather volatile if it does do what I am expecting it to do. That being said, looking forward to getting up to that range in the first place. And like I said, there's a lot of ground to cover, and the upside here, obviously, $3 is an easy ticket to entry. So now over to GameStop. Just taking a look here for the fair value gaps again. I don't see any at least that my indicator is showing me, up until 40, and then another one over here at 70. 40 is I'm seeing it as a real probability at this point, just considering how GameStop performed over the last week. It's really on a sharp upwards trajectory, and volume doesn't seem to be going anywhere. So that it really remains to be seen where this goes. It's leading the pack this time. Like I said, I do believe it's going to set off a chain reaction like SBFM did previously, which I believe this is my working theory, is that some sort of event occurred with SBFM and these short hedge funds that was the catalyst to drive the entire fiasco in the first place. People were just unaware of this, what was going on with SBFM. That I brought up this other stock ticker that probably a lot of you have not heard of. This is SBFM, and they're now listed on the Reg SHO list. For anybody that doesn't know, that's a list of companies the SEC is investigating for market manipulation, more often than not short selling. And we'll take a little bit closer here. You'll see right here, Sunshine Biopharm is listed. And yeah, I didn't even see this. This was posted about a week ago. And I've been, kind of curious, scratching my head, like, what is this SBFM ticker, and why did it explode right before, what the quote-unquote meme stock basket explosion? Something here is correlated, and we don't have all of the information. Obviously it's kind of like looking from the outside in, and we're kind of just left holding the bag here. So hopefully something's going to be done about this soon. Obviously this has taken years, but generally speaking, we have a lot of good things ahead of us, potentially with the new CAT system being involved, a lot of shareholders buying and book DRSing their shares. So we're on the verge of a technical breakout. Looks like the cycle of the market is repeating itself. Anybody out there who is sitting there and doubting, whatever price targets this thing's going to reach or isn't going to reach, in the end, none of that matters, because the price that you see in front of you isn't the real price of what these stocks are going to be worth here in the coming months, at least in my opinion. So, thanks for taking the time to listen. I know it's been a bit of a long video, but take your time and analyze the information I presented, and, I don't want to see any ape left behind. So, to the moon.